So,
all right, welcome back. It's the Chat with Kip Podcast. I know it's been a little minute. I'm super excited to get this season started. I have some super cool guests this season, and we're going to kick it off with one of my good friends we recently met. And I say good friends because we have a pretty good relationship and looking to do more. And with the product that he's about to tell us about, man, it's going to be amazing for business owners, entrepreneurs, self-employed employees, 1099 employees as well. So we got some great products to talk about in order for you to get loans for investment properties, even just to buy in general. So with further ado, I have my man Matthew Bramow, with the CEO owner of Model Mortgage. And man, welcome to the show.
hey man, thanks a lot for having me. Excited to talk about it. So kind of what you introed there. A lot of people think that they can't buy a home because they're not showing enough money on their taxes, or maybe they get advice that says you have to show a bunch of money on your taxes. But there's so many different types of loan products when we're talking about mortgages that can help not only your, primary home that you're looking to buy and live in,
Absolutely,
or investment properties. If you want to chat about, I'll start off with an investment property product that is absolutely wild. So it's called the DSCR loan, right?
Okay, tell people what that stands for, because I try to look it up myself, and I've been in real estate 26 years.
Yeah.
And I know it's been a product, I guess lately, it's been around for a long time, but now more people are self-employed, more business owners looking to purchase property, and I'm in the same boat. Like, I don't get a W-2, so it was hard for me to actually qualify for a loan.
Yeah.
So when you was talking about the loan product, I was like, man, this is ideal for people in my situation, entrepreneurs,
For sure.
self-employed people. So tell us a little bit about DSCRs and what it stands for.
Yeah. So it stands for debt service coverage ratio, right?
Okay.
And the best part is that the income doesn't even matter. So you don't have to show any income. We don't use income to qualify you. What we use is what that potential house is going to rent for, and does it cover the mortgage or not?
Okay.
Right? So let's just say, for an example, a house is $400,000.
Mm-hmm.
You have to put 20% down. That is a key. Typically, you need over 660 credit, but the income side of it doesn't exist.
Okay.
So as long as an appraiser goes out and says, hey, this could rent for $3,500 a month, and that mortgage of what you're qualified for is $3,500, then basically you can qualify.
Okay.
You just have to have the 20% down. And it's investment properties only. So for people out there that are looking to build a portfolio, we're not even looking at income. It does not matter. And it doesn't have to be a 1-to-1 ratio, but the rates and the terms are better if it is 1-to-1 or higher, right?
Okay.
So that one there, you don't even need income straight away. You just have to buy it as an investment property.
Okay.
So if, let's say you're looking to buy for yourself, right? Hey, I want to upgrade, get a new house or whatever, and you're going to occupy it. The bank statement loans are very popular.
Okay.
You do need 10% down, and over typically 680 credit there is going to put you in a 10% qualifying range. If not, a lot of investors want it at 20% down. But the bank statement product is for the self-employed, entrepreneur type, right?
Okay.
That don't want to, not that they don't want to, but nobody likes to pay more taxes than they have to, right?
Absolutely. I 100% agree, because all the tax business was, so I totally understand.
Yeah. So the bank statement loan product is just a way that we can get your income, see what that income will be on paper by looking at the deposits.
Okay.
So we're going through, say, 12 months of your business, or even personal bank statements. If someone's like an Uber driver, or they do a lot of kind of things on the side, right?
Right.
We're looking at how much money is coming into your account. And then depending on that business, there's an expense ratio factor.
Okay.
But a lot of times, there's even investors that have zero expense factor.
Gotcha. Okay.
But some might say, hey, you have 5 employees, you're running a small restaurant or something like that, taco truck, whatever, right? Then, there'll be maybe 10, 15% expense factor. But we look at that and we take your bank statements, because as a business owner like myself, like you, we want to pay our fair share of taxes, but we don't want to have to pay so much to where we're having to show the income on our taxes to qualify. So that's the alternative.
Absolutely. Because I was in that same situation when I bought my house. I have a lot of expenses, right? Payroll, but I need to show enough income in order to qualify for the loan I was getting for my home. So I had to take some of my expenses off that I really did pay for to show this income. And then I also had to pay so much in taxes just to show the income in order to qualify for the home. And I wish I would have known a little bit more about the product because it would have worked perfectly for the situation I was in. What is your ideal clients like? Who do you focus on for this product? Like, what would be the ideal client?
Sure. I mean, it's really just entrepreneurs or 1099, right? So there's a lot of people that just get a 1099 and let's say they're, working in construction or have multiple streams of 1099s. They're just freelancers, right? So 1099 income basically gets treated the same as self-employed.
Okay.
I mean, because
what if they have a mix? Like, say, what if they have a W-2 job or they might get a W-2, but they also really have their own business? Would their products still work for them? Okay.
Yeah, we can use that product, or we just use the W-2 income, and then depending on how long they've been working at the 1099, typically you want to see like at least a year of doing both.
Okay.
But yeah, it's just kind of like a side hustle. You can add that income back, as long as it's usable, right? Like you got to have the blend of W-2 and 1099 can be a little trickier.
Okay.
But like a lot of people will have, let's say, a husband and wife or two people buying a home. One of them's full-time W-2, the other is 1099. You can blend those together and get a good qualifying amount too.
Perfect.
Yeah.
Do you also do other conventional loans? Because I have a lot of clients that are first-time home buyers. Do you have products for them as well?
Oh, yeah. So, I mean, we could start at a zero down loan. We have a really great zero down option, which when you mix it with a good seller credit, which means, you're going in and you're offering, say $400,000, but you want $20K back in seller credit. The seller nets $380, but you take that $20K, use it for all of your closing costs, and also being able to buy the interest rate down. So therefore, if it's, it's an FHA 3.5% down loan, but the lender gives them the 3.5.
Okay.
And it's unlike a lot of other down payment assistance programs that what they'll do is they'll tie a second lien to that property and they'll basically hold that hostage for like 3 years.
Okay.
Meaning if you refinance or sell this home in 3 years, you have to pay back that 3.5%. But this one here that we do is refinanceable after 6 payments.
Gotcha. Okay.
So you can do a streamlined refinance and lower your interest rate even more. Because anytime something's free, it's coming somewhere else, right? So like the interest rates are a little bit higher, but that's why you can get the seller credit to offset it and still get a lower rate and not be stuck, in that for 3 years and knowing, well, okay, if rates are at 6% today, in 2 years from now, they're at, let's say 4%, but you have to stay in that loan or you have to repay the money. It's just, it gives you more options. But yeah, conventional, that starts at typically 3%, right? 3% down. FHA's 3.5% down.
Okay.
A VA loan in Texas, though, when the veteran has 100% disability rating, is hands down the best loan there is.
Okay.
You want to know why?
Tell me. I'm sure they want to know why as well. So absolutely tell us.
So it's in Texas, you don't have to pay property taxes when you're 100%. When you have 100% disability rating, like you don't pay taxes at all on property.
Oh, wow. Okay.
So
that's huge.
So yeah, I mean, and then you can qualify for a lot more if you don't have like an $800 or $1,000 tax hit to your debt to income ratio, and the payments. And I mean, my property taxes are pretty high. So like everyone's is like, it's just higher in Texas. Like,
absolutely. Yeah.
Let's say for instance, in Oregon, where I used to live a while back, the property taxes were a quarter of what they are here, but there was sales tax, right?
Yeah, absolutely. So, and y'all have state tax in Oregon, right?
Or state tax.
Yep.
And no state tax here. So they always find a way to, offset it.
Now, it seems like you're super knowledgeable about these loans. So tell me the benefit of somebody just wondering, what's the benefits working with you at Modern Mortgage? Tell me a little bit about the service that y'all provide.
So as a wholesale broker, and there's 3 different layers to this business, right? So there's banks and credit unions, I'd put in one. There's retail lenders, which are just corporations they're a private mortgage company, right? But they're ran like corporations. A lot of them are corporations.
Right.
And then there's the wholesale broker channel. So that's where I'm at. And I've been on all three sides
Okay.
because before I started Model Mortgage, I spent the majority of my career on the retail side. And then I went to a bank for a year because I wanted to see what they were doing before I started Model Mortgage. So I knew the grand scheme of the industry, right?
Right.
The back end, everything. And on retail, it's very much layered to where you have branch managers, district managers, regional managers, underwriting managers, and the whole C-suite. And how do they make money is by the salesperson generating loans, right?
Right.
That it's from the bottom up, just like any kind of sales
sure.
business there is. But the issue that I saw is all these people are making money on me, and why are my rates so high?
Right.
Like, the reason is because they have to build in so much more margin so everybody can eat off the salesperson.
Absolutely.
I mean, it's the same kind of concept at banks, but the bank typically is more limited on the product. Oh, they are 100% more limited on the products.
Right.
But us working with Model Mortgage, we're not tied to one lender.
Okay.
We have all of our wholesale channels in the background, but you never like really feel like you're working with them because you're always working with us. Processing, everything's done by us.
I know, man. Your team is super, super cool, super awesome. So I definitely enjoy meeting them as well, and I'm looking forward to meeting the rest of your team.
Definitely.
What is the dynamics of your team? Because I know you have quite a few loan officers, processors,
Sure.
coordinators.
Yeah, so we have 9 loan officers right now.
Okay.
Office just down in the Galleria, right across from the mall.
Yeah.
But you know, we've got loan officer assistants, so you're always kept in touch. You know, everyone on the file as far as both sides of the realtors. You know, we work with a lot of builders, and then it's just smooth. You know, we're available. We're not turning off our phones at 5. You know, if you need a pre-approval on the nights or the weekends, you know, we're here to give you that. One other thing I did want to mention, which will be highly important to the viewers, is I have a really good credit team that we work with. You know, they're not part of Model Mortgage, but you know, to refer clients to. That, I mean, we've probably closed over 25 loans in the last 6 months for people that couldn't qualify just because of credit.
Okay.
So, you know, I've been in the industry for 12 years. Credit companies always try to market to us, hey, we can do this, we can do that. At the end of the day, they've never done anything.
Gotcha.
What I noticed is they want to get them on like a subscription-based model, which is like, hey, give us $300 a month. We'll dispute this. We'll do that. I mean,
I have seen those kind of companies. Yeah.
Even a year later, the client just disappears because nothing happens.
Right.
I mean, I've seen these guys take people from 500 to 700 in 2 weeks.
Okay. What kind of program is this, and how much does it cost for them to?
Yeah. So, I mean, every situation is going to be different. I mean, I don't own that company. I'm not involved in that company, but they do it as a guarantee, which is great.
Okay.
And then they essentially, from how I understand it, it's per trade line. So if you've got like 3 collections, it could be X amount. You only got one thing, it could be this. But, you know, a lot of people have marks on their credit or late payments that are going to be on there for many years.
Right.
And that's going to drag down their credit. But if that's the only thing holding you back, I mean, you have the income, a little bit of assets to at least put down for earnest money. You know, it's a good solution to get into a home on that credit side of things. So
yeah, absolutely.
Totally.
It sounds like you basically take your client and hold their hand throughout the process, help them reach their goals, which is, man, tremendous to me, because I'm about giving back to the community, helping the community out, helping people gain home ownership, or helping people get investment properties. So, man, I definitely love that about you and your team. Before I let you go, give us 3 bullet points that you look for in a client to help them feel at ease working with you.
Yeah, I would say working with me and my team in general, I mean, we're all here working for you, right? Like, we don't get compensated. We don't charge you to work with us. You know, our compensation comes on the back end. So we have just as much, you know, skin in the game as you do. So we're all, you know, self-employed.
Right. And I tell people all the time, hey, man, I don't get paid until you close the deal,
Exactly.
right? Like, we can do this work for 45, 60, 75 days with no pay, because we don't get paid until the transaction closes.
Exactly. So we're here working for you, and as long as you're putting in the effort as well, I mean, that's really all we look for from a client is, um, you know, don't just fill out an application and go ghost, right?
Right, yeah,
Like
be
if you
committed to the process, be
fill it out,
committed
let's
to it.
do it,
Yep.
and if it's not it's never a no, maybe just a not right now, but we'll put you on the path to get into that home ownership, whether it's 6 months from now or 6 years from now, right? So, um, that's something that we're always gonna fight for you to make sure it's not just, "Hey, no, and then see you later," right?
Okay, okay.
Um, but, other things that will put you at ease is, we're local. We're not just a call center type of lender. We're as local as it gets. We're part of the community, and we want to give back and make sure that we're helping them out. You're not just calling in, an online lender and you don't know the person. If you want to meet us, we're here. You want to sit down,
Yep.
chat about it.
Yeah. I mean, you always take my call, so I definitely appreciate it, man. And it's good to be able to reach out to somebody who is knowledgeable and has a team to assist and help everything out. How do people contact you? Give us your handle,
Yeah, for
social
sure.
media, all that good stuff, contact information.
Definitely. My email is Matthew, Matthew, at model, modelmtg.com. You can shoot me an email. You can text me at 832-727-4128. And then mostly on Instagram. So it's just my first name dot last name, Matthew, Matthew dot Bramow. You can find me on there. Because there will be some super fire content coming out on that
Absolutely.
handle for sure, and stay in the loop. I give market updates, on there. So, yeah, that's the best way, man.
Oh, man, that's awesome, man. Thank you so much for your time. I appreciate all the information. I'm sure I'll have you back again because you got some
Definitely.
other products that we need to talk about. So, man, thank you so much. I
Yeah,
appreciate it, Matthew.
absolutely.
Hey, make sure y'all like, share, subscribe, the Chat with Kip podcast, and we'll see y'all again soon. Thank you.